Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier, and this is the U.S. mid-session brief today. We're trading a hot Tuesday session. All right, I promised some tick scalping, so here we go. We're going to do a little bit of tick scalping right now. I've got a short position built in this. This is gold futures. This is looking at the the February contract. We're going to talk about rollover in a minute. Right now, I'm up about $120 on the day. We had a crude oil trade that I'm going to recap here in a minute. But right now, the plan was relatively simple going into this trade, and it's starting to look real good for us. We've got two lots on this. We're starting to come down a little bit. We're up about $100, about $80 right now. But what we had was we had a weekly level, really a beautiful spike low to a spike high, and you'll see right in this vicinity. Let's dial it in. Right in this vicinity is where we're trading, sort of the bottom end of that 50% level. We've seen a little bit of bullish rotation here in gold over the last few seconds. Now, right now, we're back to break even, and we're going to do a little bit of this in real time. Now, I already took sort of a draw on this trade. I'm not really too concerned about what happens right now because it's a very slow time for gold. I want to see that sweep lower. I want to see that sweep probably down there to about 2660.8, but I'm not married to that profit target. Now, what I'm really looking at right now is I want to know what's going to happen up above our key level. So right in there, 62.7, we're back down right around 61.7, so we're about 10 ticks beneath that zone. But I didn't just place the trade based on a weekly level. The next thing that I did was I went to my 4-hour chart and I said, okay, can you help me? I love the 4-hour chart for gold. I think it's fantastic. And what was I looking at? Is this a spike right here? High, 73.4. Okay, not right there. That's our swing high. And if you understand anything about the Fibonacci's that I've sort of been just preaching about for the last, 3 years or so, you can see that we're right around 50%. We're sort of rotating around. Now, I would have loved to have had a little bit better convergence between 64.7 and our key level. That would have given us an opportunity maybe to pile on some real leverage and go with something low risk. But right now, the bidders are in. So we're sort of going against the current here on the 4-hour chart, but this is a very slow time liquidity-wise for GC, our gold futures contract. So right here, we're sort of milling around break even. I want to see that sweep lower. I want to see us take out 61.1 and maybe get a little bit of traction down there towards those high 50s. But for right this minute, if this thing does gap up against us, right now we're taking some heat. We're just going to have to pull off the Band-Aid and get out. So interesting trade, low participation, sort of a low volume trade, and this sort of definitely makes it higher risk. But this is sort of the signature that we've had right there. There was our rally. We went up. We sort of hit our key level. Then we sold off. We could have taken profits down here at 61.4 for about 6 ticks. I want a little bit more. So right now I'm watching that swing high right up there, that spike high very closely. If in fact we do see follow through, even a back above our key level, we're going to have to start thinking about getting out. I still like this trade though. I think we've got a real good chance maybe to rotate down and grab a few ticks and a few dollars. Right there. Okay, we're starting to get our break. I mean, this is tick scalping, guys. If you want to be tick scalpers, if you want to be in the market taking small points, we need heat, and we need it now. This isn't necessarily the greatest time to be doing this, but we got to do it sometime. Our volumes are dropping off into nothing. We've only got about, 27 contracts traded hands in the last 30 seconds. That is not very many. Right now, we are vulnerable to a sweep. If the institutions get in and they sweep the market against us, we're going to lose. But I like our resistance level. We're going to stick with this, and we're going to let this thing play out sort of out of the corner of my eye as we get involved with the rest of our stream. But right there, the bullish break against us is not good. I'm starting to lose a little bit of confidence in this one. Let's go to a 5-minute chart and see exactly where we're at. 5-minute chart, I mean, there it is. You can see the nice big bullish run that we've been on. Took us right up to our entry point. The real question is where do we want to get out? Where do we want to rip the Band-Aid off and get out? I want to see this action right here. This doji, we've got to break. You can see right there, we're on a red zone. We're between a resistance zone and a short-term support zone. We're going to see a break out of this zone eventually. The question is it going to be bullish or bearish? Right now, the short-term trend is bullish. There's no denying that. On your 5-minute chart, you can see right there, that's a significant trend. Are we likely to lose this trade or not? Right there, there's the gap against us. It's not looking good. So right now, I'm watching that swing high. I'm watching that 5-minute high very closely. I want to see a little bit of participation come in on the bearish side, or else we're going to have to scratch this thing and move on to the next trade. Now, like I said, we had a crude oil trade that came across the board that was pretty good about a half hour ago that made us a little bit of money. But right now, we haven't really done much of anything today. So I'm willing to give this thing a little bit of rope, but I am a bit concerned that we are trying to fade that short-term pressure. I want to see exactly what's going to develop here in the next 30 seconds or so. Okay, right there. That's huge. There's your 5-minute. That's the kind of price action we want. We want bearish price action. but we have to be realistic about what we're looking at. We're fighting a 5-minute trend. We've got compression. Our resistance zone so far has held up very well, that weekly zone. But if it breaks out, and I got to tell you, this looks like a compression inside candle break, we could be in big, big trouble here, and it looks like we are in big trouble. So we're going to let this thing bleed just a few more minutes, and then I'm probably going to cut it off if we do see a breakout above our resistance zone like that. Now we're starting to really get concerned. That's the break. If we don't make a stand to the bear right here, we're going to have to rip off the Band-Aid and just sort of say, well, we lost this trade. We don't have the staying power to take this short and make it a position. We've got to be thinking in short terms. The most important thing we'll do is get out of this trade when it goes against us. Right now, I want to get paid off, though. I'm not going to lie to you. I want to get paid. We've got sellers at this zone. The question is can we get any follow through against this 4-hour trend or this 5-minute trend? I don't know. I don't have a crystal ball. All I know is I've got an indicator. I'm in the market, and right now I've got to know where I have to get out, and pretty much we'll let this go a tick or two above this high, but then we're going to have to bail. So that trade's on life support right now. It looked a lot better about 5 minutes ago, and you can see the bulls are in control. So that's for sure. All right, that's a little bit of look inside of what tick scalping is, and if you're interested in that type of a trade, be sure that you check out our video tick scalping on the How to Trade YouTube channel. And right now, our ticks are getting scalped. So good to see everybody back in the room. Daniel, good to see you. Let me see, Daniel. I've been doing the 8, 13, 21, and the 9, 20. Fantastic work on this. Fantastic. I'm glad that you got on the right side of that rand. That's a good trade. We'll be looking at the 5, 18, 13 on the tomorrow on the 1 hour chart. See how it goes. Remember, tomorrow's Fed Day. We're going to talk about that as well. Good to see everybody back in the room. Mark Corp. Good to see you, Bobby Bob. Always a pleasure. JC. All right, guys. We've got a lot to cover today, and there's a few things that I want to go over from a fundamental standpoint. Remember, if in fact you need an out, you need a broker to trade with, switch markets is going to be what you're looking for. CFDs, Forex pairs. I even believe they have some futures contracts floating around in there. But remember, those are derivative futures, and we'll talk about that some other time. I'm going right through the exchange. Exchange-based futures is sort of what we're trading gold on right there, and that's also February gold. So we can also talk about futures trading if in fact you guys are interested and want a few pointers on that. Week 51, can you believe it? We're almost done. Remember, I'm going to be out of the office Friday, actually out until probably the 3rd of the year, or excuse me, January 2nd. Then we'll be back in the saddle. It looks to me like our streaming schedule is going to be a lot different in 2025. I don't necessarily know what that's going to be look like, but we will. I'm going to do my best to get on with you guys every day, even if it's just for a 10-minute scalping session or something like that. But we will be here. I'll be in and out of the room as always, so be sure to reach out if you have any questions at all. Today was retail sales, and that was really the big fundamental of the day. We saw really a significant uptick in retail sales, really suggested that maybe, just maybe, we're going to have an opportunity to get in on a little bit of economic growth, and I'll show you exactly how those rate cuts, those September rate cuts brought something, I would say, spiked consumption. And it's evident from the last 3 months, really the last 3 months of 3 months of data. We're sort of, I wouldn't say in an uptrend in consumption, but we're definitely doing okay, I would say. Tomorrow's the Fed announcements. We're going to preview the Fed announcements and what we can expect out of Jay Powell. 2 streams tomorrow. We're gonna do some live scalping on that 5-8-13. We're going to be trading that one live for you, and then also we're going to get involved with a little bit of an FOMC live, so be sure to tune in. I'll heckle Jerome Powell in real time. I like giving Powell the business. I think that's always a pretty good thing to do. In any case, right here, Fed announcements are the big one. Thursday's huge. BOJ, BOE. I mean, those are absolutely monstrous events. And then right there, your core PCE price index. So let me see. Alexander, can we analyze the guppy? Yeah, if you guys have any markets that you want to look at, I'll be sure to go ahead and give them a look. We'll go ahead and Great Britain pound, Japanese yen. Yeah, we'll go ahead and look at the guppy. I'm sort of eyeballing my crude oil, my gold trade. It looks to me like we're going to get stopped out. I'm going to let that bleed like another minute or so, and then we're going to have to go ahead and peel off the Band-Aid and live with the damage, essentially live with the damage. So in any case, right there, you're looking at BOE announcements. That's huge for Thursday. Today, retail sales. What are retail sales? Retail sales measure the change in the total value of sales at the retail level. It is the foremost indicator of consumer spending, which accounts for the majority of overall economic activity. So remember, the United States is a consumption-based economy. It's absolutely based on me getting my credit card out and you getting your credit cards out and us buying everything that we see. That's what it's about. It's about restaurants. It's about bars. It's about clothes. It's about cars. It's about all of it. And this right here, this is a pretty good look at our retail items, things that you would buy, particularly at a department store. So our today's numbers, core retail sales, 0.2%, came in a little bit beneath expectations for November. But the thing that's grabbed everybody's headlines is 0.7, the 0.7% right there for regular retail sales, 0.6% up above 0.5%. So we've seen steady growth there. And then your retail sales, except gas and autos, you'll see right there that came in less than expected. And the reason why is those cars are a big deal. There's no doubt about it. So you definitely want to take a look at something like that and see exactly how to trade that. Essentially, I read headlines that said retail sales was fantastic and was fabulous. I wasn't really sold. Take the cars out of the equation, you got nothing. In any case, retail sales in the U.S. increased 0.7 month over month in November, following an upwardly revised 5% rise in October and above forecast. So the basic gist of this is that retail sales are going up. Well, that's all fantastic, fine and dandy right here. This is a good look at our chart. Now, this is the last year or so. Take a good look at what we have going here. Now, you got this major, just a horrible number in January. Expect that again next January. Then we're sort of seesawing all year. You see the big bump in July. That's when we knew that we were going to start slashing interest rates this year. But take a look at what actually happened. We cut interest rates in September, October, November. What do you got? You got an uptick in consumption. Why? Because those interest rates went down, the banks started putting more money on the street. I have got more credit card offers since September than I had the previous year, all those months combined. And the reason why is there's fresh money on the street. They injected capital into the equation. And what that does is that gets folks like me and you going out and buying new jackets, and in my case, cowboy hats and cowboy boots and all that stuff. See how it all works together, guys. So if you're trading, understand how it all works together. And essentially what happens is the more money in the system, the better consumption. Let me see. Emmanuel, I'm 10 minutes late. Don't worry about it. We're on demand 24/7, 365 in the How to Trade trading room. So, yeah, we're going to go ahead and analyze the guppy. I want to get back to my price action trade, though. You can see right here, we did the right thing. This happens over and over and over again. We're going to let this thing bleed, even though I'm in trouble. I admit this is not going well. This should have stalled out and given us a great look at the downside of the market. It hasn't quite happened yet, and you're also seeing that resistance level that we're betting on, that all of a sudden that's become support. So we could be in big trouble here, but I'm going to let it bleed for a while. In any case, right there, that was our spike high. Now take a look at what happened to the spike high. You had a spike high right there at 26.63.4. Look at that. What's your high right there? 26.63.6, and then you get the big retracement down there to 62.3. That happens more times than it doesn't. Always remember, mental stops, that's what I'm using right now. There's nothing wrong with them as long as you have the discipline to pull the plug. See, right now, this trade's going back. We're getting back down to break even. I think we're going to make a little bit of money here. I'm not ready to bail on it. But take a look at what happened. Everybody in the world saw that swing high. Everybody. I saw it. You saw it. Alexander saw it. Emmanuel saw it. Daniel saw it. JC, we all saw it. That's easy to see. Look at what this is. Bang, go up there, you run all those stops, and then you reverse course. That happens more times than I can count on a given day if you're trading 1 minute and 5 minute charts. Now I'm starting to get happy. Now we're back down to break even. I can see this thing selling off and really giving us an opportunity. So the first thing I'm going to do to manage my trade and say, okay, where should my profit target be? What's realistic here? 61.4, we should at least get that. I want to see this thing trade down 61.2. I want to see it down here around 60. Let's let it bleed and see what happens. And by let it bleed, I mean let's just let it go. Let's let it go. We took a draw. Now it's time to get paid for our efforts. Are we fighting a trend? Yes. Do we have a reason to be fighting it? Yes. All right, that's a good look at tick scalping for gold. All right, this right here, this is going to be wrong button. This right here is going to be a big trade, and I want everybody to understand that if you're in the silver market and you're to the long side of it, there is a reason that you need to be a little bit conservative. I'm bullish silver. I still am bullish silver. I think that we're going to get a tremendous pop, and we're going to have an opportunity potentially to make a little bit of money. Now, the problem that I have with silver right now is last month's low. Scares the bejesus out of me, and the reason why is it hit right on 62%, which is right around 29.75, somewhere in there. If we trade beneath November's low, we could see a major washout, and I want everybody to be ready for that. I think it's probably coming tomorrow, especially if Jay Powell is as hawkish as I think he's going to be. Be very, very careful if you're holding long silvers. Have your eye, holding long silvers, high-O silver, right? If you're holding longs, be ready. Be ready beneath last month's low, especially if we see this sell off. Right now we're at 30.45. Last month's low is at 29.64. This could be a major move. If we wipe out last month's low, I'm a seller down here, at least until 28.30. Be very careful if you're holding silvers. I don't caution people often because it's really none of my business what you do with your trading. But if you're long silver, be careful. Right there, there's your low. Okay, see this spike low? Bang. That's a bounce off a 62%. Bang. Again, a bounce. Look at what we're doing. We're getting a little bit of compression. If that level goes and we trade beneath November's low, buckle up because it's going to get ugly. It's going to get ugly at least down here. Now, we'll be there to buy with bells on at 28.31. No question about it. But nobody wants to go for that ride. You don't want to go for that ride, guys. You just don't want to go for that ride. Let me see, Daniel. My problem with silver is that it is rigged 100%. We all know that. The institutions have managed to keep a lid on silver. Look at that gold-silver ratio. There's no real reason for it to be trading where it is. All right, we got some news stories. We got breaking news. We've been covering a lot of UFO stuff. I'm going to give you guys a break on that. You'll probably roll your eyes, but big developments there. I'm going to go ahead and let them go. Canadian dollar, though. Canada. Trudeau, not a popular man. Not popular in Canada. I live relatively close to Canada. Probably, Montana's a big state, so I would say the border's probably 6 hours north of here. Not even a hard ride. Probably 5 maybe if you get on the freeway and really drop the pedal. What I would say is this: Trudeau has never been popular, never, and it looks like Trudeau's finally going to get forced out, and a lot of it has to do with the trade war that's coming. Canada doesn't want a trade war. His cabinet's resigned. Everybody associated with the Trudeau administration has resigned. They do not want a trade war because they know that Trump can immediately throw tariffs on fossil fuels and immediately really damage the Canadian economy. And anybody that's sane doesn't want that. They want to work together. They want to work together and really build economic prowess. If there's anybody from Canada watching the stream, I think you probably agree with me. Everybody wants to get along, go along to get along. The problem is that Trudeau's not popular. He's lost the confidence of the people and the government there, and that's going to be a problem. That's going to be a real problem. So what's happening? Well, we have a tradable asset. What we have is you've got the dollar the dollar CAD absolutely exploding to the top side. So right now the USD is putting on a show against the Canadian dollar. We had a pullback buy, which is exactly what we wanted to get. We just didn't quite get it. I thought we had an opportunity yesterday. I put the trade idea out, and the market just broke. So we didn't even get in on our pullback buy, but there's absolutely no reason why we wouldn't be bullish here. It's clear that investors are going to be favoring. They're definitely going to be favoring the U.S. dollar over the Canadian dollar, and you see right there your weekly trends. We can go with all these long-term levels we want. We're never going to find a level to get in to buy into something this hot. Let's go ahead to the monthly. So what I would recommend when you get in this situation when the market's broken out and it's trending, there's a couple of things that are very simple. We made a key levels video out that not many people watched. I really like that video. It's how I trade. Spot the key levels. 145 even, and we're painting with broad strokes, so just assume that's 145. That's going to be a big deal, big round number. I don't believe that 144 is going to do much for us. I think we're going to 145 just because it's a big round number. 150 is definitely a big round number as well. Something like that. Double top right here. That's what I would be hyper fixated on right now. Markets have memories. And if we get right up there, that was last seen in January 2016, 146.89. Listen, it was no coincidence that this loony rallied, this dollar CAD rallied big time in 2016. What happened in 2016? January of 2016. It was an election year. So there was a lot going on there, big rally, and then we came right across the board here in 2020, March of 2020. That developed during COVID. Those highs, that double top is probably the most important number in the market for the dollar CAD. So right around 146.50 to 146.75, probably going to be a pretty doggone good sell. As a matter of fact, I would be looking to sell right up in front of there, but we're still a ways off of that. So right now, there's absolutely no reason not to be bullish until we get up into that area. So if I was looking at something like this, dial it right down to a 4-hour chart, and I'm just looking to buy pullbacks. That's the bottom line. 142.84. That's a fantastic bid. Follow trends. Whenever you can, follow trends. Something like that. It's good stuff. It's good stuff right there, 142.84. So that's what, about, I don't know, 30 pips away. Shade your entry a little bit, maybe 85s, 87 buys, somewhere in there. Stop loss you could put beneath this 50% and just try it for a real tight 15-tick scalp or something like that. 62% right there, 142.60. That could be a pretty good one as well. All right, let's take a look at our pet rocks, see how we're doing. Well, we've got a little bit of money made. We're up about 120 bucks here. This market structure is really taken over, and this next leg down is what I'm looking for. I want this to move. I want it to go. Let's see if we can get beneath that key level right there, which is 61. If we wash that out, we're going to go way low. Right now, we could take it off the board at about a plus 140, which is pretty good. It'll complement our other trade pretty well. Do we want to do that? We took 63.6, so we took about a 16-tick draw on this, and we're only up, about 7 ticks. I want that next leg down. That's what we really need to do to make this trade pay. I just don't know that we're going to get it. We got a support level there. I've lost my patience, and we're out of that thing. I closed it out. Why? Because I gave it a lot of chances there. I gave it a lot of chances to break against this 5-minute trend, and I also had to remember where I was for the day. Now, inevitably, just like if you had stopped yourself out 1 tick above this swing high and watched the market reverse in your favor, inevitably, as soon as I'm out, this thing's going to gap down. More times than not, once you cut it off, and there it goes. That's just the way it is, but I don't care. Now, why did I make that move? I was up $120 on my first trade today, WTI crude. All right? That last trade kicked me up another 100. Now, did we take a big draw? Yeah, we did. But I had the money. I already had winning trades, so it wasn't like it was going to drain my bank account if I lost. In many ways, I was trading with the market's money. Now, everything that I just did, every professional out there will tell you that I'm wrong. You've got to wait for the big moves and get in and rack the big money. But in my mind, if I'm tick scalping, what am I up today? I'm up 220, trading 2 contracts. It's not bad. That's not bad. The crude oil trade was fantastic, paid us off in short order. That trade right there, we took a big draw. I didn't like it. We took the heat, but I wanted to believe in my level. I knew where I was getting out. I mean, if we went too much higher than this right up here, I'm out. Got a nice retracement. The trade didn't go the way that I wanted, and we still made money. That's how you can beat the markets. Your trades don't always have to go perfect. You don't always have to be right. But what you do have to do is have an idea what you're doing and know when to cut these things off. I refuse to exit 1 tick above those swing highs and swing lows. I want to see what price does up there. If it would have broke hard above us, I'd have got out. Simple as that. So that's one way to tick scalp. Too big of a draw for me. I would say that trade's probably a C. That's not an A trade. We had a trade right in here today that was an A trade. This WTI crude oil, let's just go ahead and cursor over. This was an A trade. And what I mean is we had a nice daily sequence set up. Something like this. And I've got my point of control stuff up there. Ignore that for right this minute. But we had a level. Now you see today we sold off. We went right to 50% and we bounced. And then right up there at 69.38-ish, we pulled back right to that zone. All right, let's go to our 30-minute chart. Bread and butter for WTI crude oil futures right there. What did you have? You had a point of control at about 43. So we know we've got a ton of volume there. But what else did we have really going into that trade? I'll show you my exact rationale. This high right there, 7 a.m., 9 a.m. Eastern, that's the beginning of your WTI pit. What do you got? 32, 38, sold 35s right off of that moving average. That was a fantastic trade. We got 7 ticks, no draw, fast, no fuss, no muss, and we were out. Looks complicated, huh? It is. That's why we focus on a lot of basic strategies, definitely on our YouTube channel. That's what we like to focus on, is just to get you guys thinking. All this stuff is incredibly advanced. I can sit here and talk about fractal geometry and TPO charts and volumes and market profile theories and all that stuff. It's hard. It's really hard. We like to keep things relatively routine, but I get a lot of criticism on YouTube for, why are you doing this? It's too easy. It's too easy. Well, we can go as difficult as you want. But difficult isn't always good. As a matter of fact, a lot of times difficult is bad, and there's no two ways about that. So a lot going on though with the U.S. dollar here in the next 24 hours. I think that we're going to be in for some real business. UFOs, I had to check in with our UFO fans, take a good look at them. It just isn't any good. None of this is any good. I look at this and I go, well, I mean, what does anything mean? Now the government's coming out and saying they know exactly, or they don't know exactly who's doing it, but that it's all legal and there's no public threat and all this jazz. So all those rumors, or supposedly rumors, that these things were looking for nuclear weapons and whatnot, those seem to be out the window for now. But I mean, this is breaking all the time. Every 30 minutes you see a new update, and it's injecting fresh uncertainty into the market. So we did get a request for the guppy. If there's any other markets you guys want to look at, I'm more than happy to do so today. I sort of already showed you what I was doing today. We can outline really anything you want. Fed's up tomorrow. That's a big one. That's a big one for the dollar. In any case, Great Britain pound, Japanese yen. Good look at a daily chart. You know, we almost had a Bollinger W here, but not quite. That would have been sweet. That's your first low, and then a pullback. You could say maybe that's your big green candle with your W. Fascinating stuff there. I've always been, over the last 3 or 4 months, I've sort of just lined up and just bet that, hey, listen, this hammer formation, this monthly hammer, that's incredibly bullish for this pair. Now, who can really trade it? It's too big of a draw, but that's a nice accumulation type of a trade, and it looks to me like we're going to keep going up here with the guppy. The real question is how fast and how far. So right now, we got sort of a bullish month. We've got some nice wave structures. I mean, I hate to be Mr. Hindsight, but realistically, you'd go right from this spike low to this spike high right there, and you can see how beautiful this 38% to 50%, this 50 pip range really was. I mean, then you finally got the big break. So right now, how do you want to trade it? I want to be long. I don't want to be short. We broke above our moving average and our Bollinger midpoint on the daily. I would absolutely love to get long here. Let's have a look. Can we? Well, we can go right from this spike low to sort of that today's top, and you've sort of got that exhaustion zone right there at 94.77, something like that. So we're back up to 95. That scalp's already gone, I would say. So what do I want to do now? A couple of options. Buying at market isn't one of them. So if I'm interested in maybe making a trade here and saying, okay, what do I want to do? How do I want to get this done? Probably going to have to wait. And I know you guys are tired of hearing me tell you to be patient, but you got to wait for a good trade location. So we can hit this 194.75. We could try to scalp that again, but something down in here, probably 78%, something like this. 153.50, beautiful stuff. 62%, 194. Back end of our golden zone. That's a great trade. It's a fantastic trade. So I would definitely be looking at that. Potentially those two deeper zones. Once we hit those 38%ers, I really do have a problem with trying to hit them again and again and again. You can see right there, sort of came down that vicinity trade. Nice move there. Then there was finally, we hit that support zone, and it worked like a charm. So the real question is do I want to be bullish or bearish here? I don't really know. It looks to me like we're just sort of wandering. I want price to get out of that state of equilibrium and give us an opportunity potentially to get involved with a little bit of meaning. And what does that mean? It means the market has to move. It has to go to one of my levels, excuse me, and then I want to trade it. And then we trade it aggressively. Let me see, Daniel, are you looking at government bonds? I just look at the yields. We'll talk yields a little bit tomorrow. We'll look at the 30-year mortgage rates and some long-term yields. But, more than likely, I don't look too much on the yields other than when they get up above 5% like they've been, then that's a pretty good bearish, sort of a bearish thing. But right here, I mean, our prediction for tomorrow is that we're going to see Jay Powell back off of 2025's rate cuts. And I think we're already starting to see that reflected. Let me see, for the Great Britain pound. I don't know. I honestly, the coaches that worked here, especially Nick Quinn, he worked at Lords of London. He knew a lot about UK bonds and the debt market. I don't know much about it. I really don't. So when I don't know, I stay out. But I know scalping. Pretty good. Let's go back to our pet. See this? This is why we take money. This is why we take money. A lot of people get on me about taking smaller profits. That right there is why. That right there. Anything can happen, especially when you're in the 1 minute and 5 minute time frames. Believe me, anything can happen. Let's go ahead. I want to pull a WTI crude oil chart, though, because we did have a trade, sort of a trade recommendation that put out, let's see, this was on, I believe this was on X. I put it out on X yesterday. But it was, that's not it. what we had was a real nice daily Fibonacci. Swing low right there. There's your spike high. Went right down there to that 62% level. That's pretty tasty right there. So 68.67, what was our low today? 68.84. Pretty good trade, but what I wanted to look at right up in here was that what happened at that 38% level, that 69.71. So let's go ahead, dial this thing down to maybe a 5-minute chart and see if we can see what we can see. All right. So right up in here, we're just sort of milling around. We're trading, and then we finally get our break right around 1:10 a.m. What happens right around 1:10 a.m. my time? You don't have to know that. There won't be a test. UK Open. So the traders, energy traders came online, and something broke right on that London Open, it looks like to me, somewhere right in that vicinity. And there was your first 5 minutes. So your low right there, 69.64. What happened here? 69.72. Went about 8 ticks. What kind of bounce did you get? 69.80. That would have worked for a real tight scalp, but it would have been a tough trade. But see, you got a little bit of bullish participation there. Took us up to about 69.87, but the lid really appears to be on this market at about 70. So, I mean, if I was trading U.S. oil probably from here till the end of the day, or at least for the next hour, I'd be looking to unload the farm up there at about 69.71, 72. Put my back against 69.75 and just short it and get in there for a nice intraday trade, probably looking for 10 pips or so, 10 ticks, something like that. But it looks to me like this market has a lid on it at 70, so I would be very careful. Remember, tomorrow's Fed meeting, going to be huge. Also, you've got EIA crude oil inventories reports. That's going to be big as well. You can see right now the market's sort of coming our way. You could probably intraday scalp, and I may do so in the next hour or so. I just got to reevaluate where I'm at money-wise and what I want to do. So that right there is a pretty good look at intraday stuff with regards to U.S. oil. For me, the game's relatively simple. You've got 2 of these daily Fibonacci's, okay? Typically, you'll be able to scalp in between this zone, especially this time of day where the market's just not that active. Volumes have really dried up, and you'll have an opportunity probably to sell up here and buy down here. So your bids are going to be 69.20s, and your sells are going to be, 69.70, somewhere in there. That'll give you a couple of high-impact scalps later in the day. More than likely, you will get one or the other. That's one of the great things about tick scalping. I mean, it's always something's always coming your way. I mean, it really is. A couple of things we got to talk about then. Let me see, Emmanuel. I finished all my courses last week. Oh, thank you. That's fantastic. I hope you enjoyed some of the content. We really like helping out new traders here any way we can. That's an important part of How to Trade. That's the name of the website. It's How to Trade. So How to Trade. All right, couple things we're going to run through real quick, and then we're going to sign off. I know I'm running long again. I'm consistently running long, but that's okay. We got to go over this stuff. All right, if you're trading futures contracts, and if you're trading CFDs that are based on futures, U.S. oil, your U.S. 30, U.S. 500, U.S. 100, you have to understand when the futures contracts roll over. Now, rollover, there's all different kinds of rollovers. I'll spare you the 1 hour tutorial. Today, we saw WTI crude oil rolled. Well, it actually rolled yesterday, but that's okay. This is sort of a decent lesson. Rollover means we always want to trade the front month contract. This is important to you guys if you're trading U.S. oil because right now U.S. oil is reflecting that February WTI contract. So remember, we always trade futures a month or 2 months out in advance. That's what we do. We're always pricing something according to what it's going to be worth, not what it's worth right now today. So remember that. And if you can ever get your head around, well, it's actually worth right now today what it's going to be worth in 2 months, then that'll sort of screw up your mentality, but it's the truth. So we always just go here. So if you ever have any questions about, when's rollover? Very simple. You come here, CME, you look at these markets, WTI crude oil, you're watching volumes. You're watching volumes and you want to see exactly what's going on. I always love to go way out in the future to see what the market's thinking. And the market really likes the crude oil pretty much to stabilize or maybe come down a little bit this next year. I would probably be to the short side of those markets, but that's okay. We'll talk a little bit about that more in January. So for us, we had a big deal. There's 2 types of rolls. Well, I mean, there's all kinds, but typically monthly, like crude oil rolls every monthly. But something like the E-mini S&P 500, this thing rolls quarterly. And all of your currency futures, they roll quarterly. And what that means is every quarter, 4 times a year, you roll. 3 times, so it would be March. I don't know, what is it, March? I don't even remember. But it's typically you're going to roll every few months, every 4 months. So right there, you can see we've already rolled to March. That's where all the volume is for like the E-mini S&P. So if you're trading a CFD that uses one of these futures contracts, as its basis, you've got to be sure that you're trading the right contract or you're going to get hurt. WTI crude oil was very, very sparse yesterday. It was really hard to trade, and the reason why it was rollover. The volumes were diluted. What that leads to is a thin market, like we were just trading with gold. A block order comes in and price absolutely moves. We don't want that. We want thick markets. We want a lot of volume and efficient trade. That's what we want. So that right there, our quarterlies rolled. So your E-mini Dow, your E-mini NASDAQ, your E-mini S&P 500, they all rolled today. And that's absolutely huge. So definitely keep an eye on that. Last thing we're going to cover is our interest rate expectations. We've got two live streams for you coming up tomorrow. I'm going to go ahead and do a trading strategy blitz in the morning. So be sure to check that out. We're trading the 5-8-13. So we're going to put 10 minutes on the clock, and we're going to get as many trades as we can, maybe on a 1 minute, maybe on a 5 minute. And then also we're going to back off and do FOMC live later in the day. I'll have Jay Powell's presser for you, and we'll also trade that live. Right now, what do we got? 95.4% chance that we get a quarter-point rate cut. Remember, it's going to be all about expectations and forward guidance. I have a feeling Jay Powell's going to be a little bit hawkish. He's going to say this is the last rate cut for a while. He's going to say the economy's strong. Jobs are coming back. Consumption's high. Life's good. We've done a great job, but the new administration and their tariffs, they're going to mess up everything. Now, he won't say that, but I'll tell you when he says something that's sort of a mystery, I'll tell you that what he means and when he means it. Me and Jay, we get along real good. All right, Emmanuel. Now I'm going to sign off. I'll go ahead, swing by the trading room and ask me. I'll send you a chart. I'll work a chart up and give you a few trade ideas for the Euro Swissy. So a lot going on today, guys. I want to thank you. As far as the tick scalping went, it went pretty good. So we're up 220 on the day. We had two trades. The crude oil trade was beautiful. The gold trade was way too hard, and you can see right here. Let's go right to gold. We did the right thing. I always trust my judgment. I know to take the money when it's there. So right here, my next trade would be this other weekly level right up there at 64.7, something like that. And we're getting there. I might be scalping that relatively soon. All right, everybody. Have a fantastic week. Tune in tomorrow. FOMC Live. We're going to get all over it. I can't wait. Absolutely can't wait to hear what Jay Powell has to say. Thanks again. Trade the action well, and we'll talk soon. See you.